Hi, it's Frank from CappThesis. Today we're looking at the S&P 500's reaction to the CPI data, and we're going to frame this both from the very short term and long term point of view. At the very end of the video, we'll talk about a scenario that you'll definitely want to stick around for. So let's start with this chart, which looks at the S&P 500 and all the CPI days going back to the beginning of 2023. And quite simply, we have the dates highlighted in blue when the S&P 500 was higher 2 weeks later, in red when it was lower. And as we know, over the last 3 months, the S&P was higher, no surprises there, but also point to the fact that we were hovering near overbought most of the time, including this time coming into the report with an RSI reading of 72. And so no different from that standpoint. The biggest difference so far is that now we're up 23% from the October low here. So on an annualized basis, that's 80% for the year. We know this pace can continue. The point being right now is the market has proven over and over again that being overbought has not been a bearish phenomenon. And so if that changes this time, meaning that if a dip isn't bought and if we don't make new highs right away, that could tell us that something has changed. And that's what we really care about going forward. And so in terms of what we've done, again, up 23% from the low, but we can really talk about this within 5 different rallies along the way. And as we can see here, this is the 5th one we just had, all of them being at least 4%, the biggest one being just about 7 right away. Now, each of these, though, was strong enough to produce an overbought reading on a 2-hour RSI basis here. And with each of them eventually fading just a bit, but not bad enough to get that indicator back down to oversold. And that's a very important point that we've been talking about for quite some time, looking at even when going back into earlier 2023 from the spring to summer rally, that RSI didn't hit oversold until market started to roll over at the very beginning stages of August and really nail the top. And so we're not looking to nail the top right now, but it is interesting to see that we're still hovering above this oversold point for now, at least, and that's been with us the entire time. So if and when that changes, it could indicate, again, something is changing, and that's what we care about most, is because the character of this market has been very strong up to this point. And we see that in terms of what the drawdowns look like as well. Still not more than 2% from the high from yesterday, and really not too much different from that perspective so far. Much different, of course, from what we saw from August to November. So we know at some point this is going to change, right? You can't just hang around within 2% of the high at all times. It's all about what the market does after that occurs. And so another way of looking at this is to look at it from the very beginning of the low from October 2022, where all of the action is being confined into this long, relatively wide trading range here. And so we can look at this many different ways, but for the most part, this is held, and this is in log scale as well. So it normalizes the moves a bit. But even from that perspective, the most recent rally has been longer and steeper than the rest. The only thing that's missing so far is that we haven't had the rally get back up to the upper threshold of the bigger trading channel, where all of the previous 3 all did so, and it was after that that a pullback occurred, with most of them, I guess 2 out of 3 of them at least, coming back down to the lower part of this level here. And so this is what we're looking at. So worst case scenario right now is that this is the top and that the market needs to sell off. But again, we have to think about what could happen from that point. It could still zigzag a good amount and still be within the confines of this longer term trading channel. And so the good news coming into this week is that the S&P achieved another upside target. We're talking about this one since it broke out here on December 1st. So 5,030 has been achieved. And so that was about 10% move in about 10 weeks. And so about 1% a week. Not a bad clip at all. Now things have slowed down since this, but of course this was just a slingshot higher that produced a lot of those very strong breadth thrust indicators and so forth and so on. But the point being is that usually kickstart a move that can get more mature and consistent. That's what we had up to this point. Now, that is the third major bullish pattern target that we've seen since the lows. And we talk about this a lot. So uptrends are formed by seeing successful bullish patterns work over and over again. Sometimes some of them are not as big as others, right? This one triggered on December 1st, as we talked about. And in the interim, waiting for that one to be achieved, we saw the smaller one, of course, work just in a very short amount of time. And so as of right now, looking at this from a daily perspective, there are no more live bullish patterns with us. To get another one, you just have to have more consolidations, and those consolidation patterns so far have been resolved to the upside. And that's what we're looking for again, if and when bid comes back into the system this time, because the only live pattern we have, and we talked about this in the last video, is the one that has a target all the way up to 6,100, more than 20% away still. And so that was triggered just a few weeks ago. This is a weekly chart when the market went through 4,800 and continued higher. So we're still, say, 3 or 4% above that breakout zone. So we still have some wiggle room right now. But even if we get here, right, there is obviously a good chance that we're going to get a lot different, smaller patterns along the way to judge from. And we don't need every single bullish pattern to play out and have an upside target hit, but we do need most of them to occur that way. And so going forward, of course, the question is the most recent high going to be a top? Is this going to turn into a bearish pattern that finally plays out? And it seems like, everything could be set up for that way, get rallying into CPI up more than 20%. We're now through the middle of February, and from a seasonality perspective, the first half of the month tends to do better than the second half. So all those things are with us. Of course, the only thing that we're missing is what happens when the next rally attempt occurs if we don't get that lower high. Well, I think we know the answer, because that's exactly what has been occurring since the low in October, where each one of these pauses could have been the beginning stages of a topping pattern. We have downside follow through not getting worse than 2% at any time, regardless of what's leading. That is going to make bearish patterns inadequate and just not work out, right? So failed bearish patterns are just as important as successful bullish patterns, because on the way down, they worked, right? The bearish patterns worked. The bullish formations did not. And so really look at 2023 and the beginning of 2024 in its entirety, there's only been a few trends along the way, and they've lasted for months at a time. And when they've changed, we can pinpoint the low, but really it's about identifying when the patterns start to reverse. So that's what we're looking at now. Check out these videos and subscribe, and I'll talk to you next time. Thank you.